Are you ready to understand the forces shaping today's financial markets?
In this compilation, top analysts like David Lin, Emily Brown, and Michael Gentile break down crucial trends that you won't want to miss.
We've harnessed AI-powered summaries to deliver their wealth of knowledge in just minutes, saving you precious time while keeping you informed.
So let's dive in. Up first, David Lin shows how inflation reveals market vulnerabilities and what it means for your portfolio.
And stay tuned for Emily Brown, who discusses the critical risks related to the semiconductor supply chain and tech stocks. Today, we will explore David Lin's economic insights regarding how inflation indicates market vulnerabilities.
His analysis stresses the importance for investors to understand these changes and strategize accordingly.
David Lin emphasizes that inflation significantly influences market behavior and consumer spending.
He warns that rising market volatility is a cause for concern among investors. David Lin illustrates how rising inflation leads to higher prices on everyday goods, influencing consumer buying behaviors.
These behavioral changes could have substantial implications for overall economic health. What is David Lin's take on current market volatility?
He indicates that heightened volatility reflects significant economic uncertainty, hinting that investors may need to brace for larger corrections.
What forecast does David Lin have for the next few years?
He anticipates that ongoing inflation trends will likely lead to further shifts in the market.
David Lin recommends that to face these economic challenges, investors should reassess their portfolios to include inflation-resistant assets.
Furthermore, regularly monitoring key economic indicators is vital for making well-informed investment choices.
Today, we're exploring the insights provided by Emily Brown on the vital role of semiconductors in the current economic climate with host David Lin.
Emily points out that inadequate semiconductor supply could threaten equity market stability.
Emily Brown stresses that the market's heavy reliance on semiconductor supplies renders it vulnerable.
David Lin notes that interruptions in the semiconductor supply chain could pose serious risks for technology stocks.
What observations does Emily share about the effects of semiconductor shortages on tech companies?
Emily indicates that substantial shortages might impede production for leading technology products, potentially leading to lower stock prices. David Lin illustrates that past tech market fluctuations demonstrate comparable risks in relation to semiconductor dependencies.
What market indicators does Emily advise investors to follow?
Emily recommends that investors keep a close watch on semiconductor production figures as well as earnings reports from major tech firms, which could indicate general market health.
Looking ahead, what are Emily's predictions for the tech sector?
Emily anticipates that unresolved semiconductor issues could lead to greater volatility in tech stocks, undermining investor confidence.
Emily encourages investors to diversify their portfolios to reduce the risks tied to technology dependence.
David reinforces the significance of remaining informed about semiconductor news, knowing it could influence investment decisions.
In today's discussion, we have Michael Gentile, who shares his insights on the risks for equity markets looking towards 2026.
Michael alerts us to the potential for significant corrections that investors need to be wary of.
Michael Gentile indicates that there are serious risks for equity markets by 2026.
He underscores the necessity for investors to prepare for possible volatility and market corrections.
Michael points out that high inflation is anticipated to be a challenge for the coming years.
Increasing interest rates could exacerbate negative sentiment in equity markets. Michael suggests market corrections could see declines of 20 to 30%.
This reinforces the importance for investors to actively manage their portfolios. What investment strategies does Michael endorse?
Michael recommends diversification into defensive stocks and commodities to safeguard against market fluctuations.
What are Michael's predictions for the market as we approach 2026?
Michael sees a possibility of stabilization, but warns about severe downturns and sustained volatility.
In conclusion, Michael stresses the importance of regular reviews of investment portfolios.
He emphasizes that being vigilant about inflation and interest rate changes is essential for effective investment planning.
Welcome to today's discussion on the housing market.
We're going to hear from Gerli on the current state of housing demand.
Nick Gerli identifies key factors, particularly the rise in interest rates.
These high rates limit affordability for many potential homebuyers.
He points out that remote work is shifting preferences towards different living situations.
This, combined with uncertainty, leads to a more cautious buying approach. Nick mentions that rising mortgage rates are impacting housing affordability.
This raises the question of whether a market correction is forthcoming.
Nick indicates that remote work is influencing housing preferences as people look beyond urban settings.
Buyers are increasingly seeking suburban or rural homes that are affordable. Looking to the future, Nick predicts sustained low demand due to economic factors.
He advises potential buyers to consider flexibility in their options.
Nick forecasts that persistent low demand might eventually favor buyers.
He articulates that economic adjustments could create new buying opportunities.
In conclusion, Nick stresses staying informed on interest rates.
Moreover, flexibility in searching for homes will likely yield better results.
It's essential for homebuyers to remain vigilant in this volatile market. Today's discussion features insights from Emily Johnson on the market's potential recovery, focusing on stocks, mining sectors, and precious metals.
Emily points out that the markets are at a turning point with the possibility of a rally, but also significant risks.
Emily identifies that volatility in the market is currently a major concern for investors.
She explains that the uncertainty in economic signals is hindering recovery efforts. Emily highlights that investors are largely cautious given the current market volatility.
Many are driven by the unpredictability of market movements and potential declines. Emily notes that current economic indicators are offering mixed signals.
These mixed signals imply that growth could be compromised due to inflation and interest rates. Emily observes that in times of market turmoil, gold and silver are often considered safe havens.
This trend shows increasing demand for these metals during economic downturns. What are Emily's predictions regarding the market?
She forecasts that a bullish rally could materialize if economic conditions stabilize.
However, should the current challenges persist, market volatility may remain. Emily recommends that while there is room for optimism, investors should proceed with caution.
She encourages a diversified approach as a strategy to mitigate risks during these uncertain market times.
Today, we're exploring banking risk management strategies with expert John Smith.
John's insights reveal how recent actions by banks indicate evolving risk management strategies.
John Smith asserts that recent banking strategies demonstrate adaptability to economic changes.
This suggests banks are preparing for future market shifts that may impact investors.
What does John Smith suggest about the current banking strategies?
John mentions that banks are adapting to mitigate risks tied to market fluctuations.
How should investors respond to recent banking strategies?
John advises that investors need to evaluate their holdings and anticipate shifts in the banking sector.
What does John Smith predict for the banking sector?
John forecasts that tighter lending by banks may inhibit growth and raise market volatility.
John Smith stresses the importance of comprehending banking strategies for investors.
He highlights the need for adjusting risk assessments and proactive planning in finance for upcoming challenges.
What an incredible array of insights we've just explored.
Indeed, we've heard from experts like John Smith, who emphasize the banking sector's vital role in our economy.
And Emily Johnson's take on market instability in stocks and precious metals adds another layer of intrigue.
Absolutely. It's fascinating how they all highlight the challenges posed by inflation and volatility.
Speaking of challenges, Nick Gerli pointed out how high interest rates are reshaping housing demand, especially with so many now working remotely.
Right, and then we had Michael Gentile warning investors to brace for significant market corrections down the line.
And let's not forget Emily Brown's critical insight about semiconductor markets being pivotal for tech stocks.
Which definitely ties back to David Lin's practical strategies for navigating these economic uncertainties.
It's fascinating, yet daunting how interconnected these perspectives are.
True, and it makes the need for informed strategies even more clear.
If you found value in these expert discussions, please give us a thumbs up and subscribe.
Your engagement helps us continue to bring you these insightful analyses.
And make sure to catch our upcoming video where we'll explore global trade dynamics and their impact on markets.
You won't want to miss it. Thanks for joining us today.